Hi, this is Alan Mandel, Senior Precious Metels Analyst with HTDT Gold in New York, talking to you from our Wall Street Bureau. Well, today is another day of waiting for the government to decide whether they'll lift the debt ceiling. By the time this broadcasts, the debt ceiling will already probably have been decided, and I think they're going to raise it without much of a fuss, maybe delay the inevitable for some time in the future. I think this is the worst of all worlds. Last week, the Fed did not taper, as I have suggested for some time now. Two reasons. The economy is too weak, and also the Fed didn't want to create any turmoil leading into the budget talks. So they really had their hands tied. It's also an admission that the economy is very slow. What we have is slow growth, rising inflation, and rising unemployment. Now, there are some bright spots. Temporarily, the number of jobless claims for unemployment insurance in the U.S. have dropped. But in Europe, in many countries, Spain, Portugal, Greece, unemployment is at an all-time high, many years. And also, the mortgages in the EU are all, or many, are very much underwater. The banks are keeping these underwater mortgages, these non-performing loans, on their books as assets that will eventually be repaid. It's going to be a tough road to hoe, and the banks are very weak. Another shoe could drop at any time. We just don't know what it is just yet. The stock market, being what it is very unpredictable. It's up 140% since 2009, and it's going to get weaker. I just don't know exactly when. Now, gold and silver, in my view, are going to be the best asset classes going forward. They're all going to go up. Today, Thursday, it was reported that Thailand is increasing gold purchases by over 100%. We know that China is buying gold, so is Russia. Many countries, their central banks are buying gold, and there continues to be record demand from many countries, especially the United States, as the price drop has spurred more buying from investors and less buying from hedge funds and stock equity guys. So going forward, I see a very bright picture for gold. When the Fed starts tapering, it's going to show another sign of a problem. Interest rates have been rising steadily. They hit 3% last month, and they're up from 1.3%. The tapering is just going to make matters worse. So when the budget talks are concluded, all the shenanigans are going on, and they're going to continue happening until a black swan event, some unforeseen event, is going to knock the stock market down. The stock market is also buoyed by manipulation. It's a manipulated market. The Fed calls the shots. Low interest rates make assets go up. And when the interest rates rise, asset prices stabilize and even come down because the yields, the high yields compete. The risk-free, so-called risk-free rate of return competes with stock capital gains and dividends. Now, this is a very serious situation. There's manipulation going on in the marketplace which transcends economic developments. The governments are trying to hold silver and gold prices down so it doesn't scare anyone. So going forward, I see a number of factors conspiring to push gold and silver prices higher, and I'll keep you posted on future updates. Thank you. This is Alan Mandel, HTDT Gold, and I'll see you next week.